The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I am Dollar Will. And let's talk a little S&P. Give me a chance here to get it together for you. It's been a while. I look back and saw I only did like 8 videos last year. God, I checked out. It's hard selling this financial stuff, y'all. It really is. I know what y'all like to hear on the manosphere. Let's see. Look at this. Got a little bevy of things here. Okay. And come on, StreamYard. There you go. Great. All right. Let's see. For those of you who are new to how I do things, I'm an Elliott Wave Theory trader. I combine Elliott Wave Theory, candlestick, some basic candlestick patterns, and of course, everybody uses price action. What we got here is the S&P since 2009. But before I get to the now, well, there's a bigger context I want to put this in, but let me work it this way. So we had this nice support channel going up. I'm sorry, not since 2000. I'm sorry, this is since 2020, March of 2020. We had a nice rise, and we were going along just, great within the channel with a nice little support. Then all of a sudden, back when the year began, it ended. And you may recall from the few videos I did this year, even back in September, and then I think I did another one closer to Thanksgiving. I pointed out back here that we would likely run through the end of the year 2021, because of the way I was, we count waves in Elliott Wave Theory to make projections about how long trends might last, what price level it might reach, and all that stuff. And it projected that we would would likely make it through the end of the year, and then sell off. One main reason is, the trend was just naturally ending, but it seemed to be ending at a point where traders would avoid paying taxes, would avoid a tax obligation, an obligation to pay taxes in April of 2022. Because the trend ended in 2022, the stocks sold on the 4th of January. The taxes on the stock sold on the 4th of January, those taxes aren't really due until April of 2023. And just as I said back in September and November, that's pretty much what happened. And so in Elliott Wave Theory, you get 5 waves up and 3 waves down. I'm not going to go into the particulars deep into it. I'll just give you that general overview. The depth of Elliott Wave Theory I get into on my Patreon. I don't know how YouTube feels about me mentioning prices, so I won't mention it, but it's the cheapest you're gonna find. I have a lot of people. Let's just say I have a number of people, a healthy number of people in my Patreon that were students at other places. Let's put it like that. Okay. So, yeah. Join, and I'll tell you why. I'll tell you what the deal is. All right. So anyway, so we got this in Elliott Wave Theory, prices have corrections in three waves down. So after a long trend, there's a natural need for prices to what we say quote correct or pull back. And we would call this the A wave, and this rise that we are completing looks like a B wave. You see right here where the price broke the trend line. We had this red line with support, and then on the 18th of January, we had this decline. And since the 24th, we've had a bit of a rebound, but we didn't make it back to the top, and I don't think that we will. There's other tools involving oscillators and all that. I don't want to get into it, but this is what we should really watch for. I'm gonna go down to the 5-minute chart. Okay, I'm sorry. Back out here to the daily. So we broke right here, and we pretty much traded right back to this general area where I like to say scene of the crime. Okay, and everything was great when the price was north of this red line. Then it went south of the red line right here, and we traded right back up to that area. And it looks like we're gonna still continue going down. Okay, um, these oscillators are helpful. So for the folks who say, I don't use any oscillators, that's fine. But if you know how to use the oscillator, that's a whole different thing. Because the oscillators tell you useful information. So I don't have a problem with trading without the oscillator. But my question is, do you know what the oscillator is telling you? How it can be helpful? All right. So what got my attention today is the same thing. Price was moving along fine, and it broke a trend line. Broke a trend line. Go down to a 5-minute. It got pretty nasty. Now, and we made a lower low. This is the most important part. That the low we established in this at the open of today, this morning, the low we established at 11 a.m., we took it out. So the price hit a low at 11. So it started declining at 7, let's say 8 a.m. to 11 a.m. It had a decline. And then from 11 a.m. all the way until 5 minutes before the close at 3:55 p.m. Eastern Standard, the price made this nice higher high. But this high is in a critical technical area where the price would naturally find resistance and would be likely to fall. What happened next is what part a big part of the concern. Most of the day's gain that took from 11 a.m. it was vicious selling. In 20 minutes, it wiped out 5 hours worth of gain. And these 3 candles, I'll say 15 minutes. This is a 5-minute chart. Each candle was 5 minutes. So most of it was wiped out in 15 minutes. And then it kept going lower to make a lower low. In technical analysis, when price makes a lower low, that's especially for a trend that had been running for a good while, that's a potential sign for a reversal. So I'm not saying it's absolute that it is going to reverse right here. It's likely, it's most probable that it is. Okay, all right, because it would fit with larger concepts in Elliott Wave Theory and the like. Now, tomorrow should start strong, and we should trade back up here. But the question will be, will we go higher? And I think we're going to fail. Tomorrow the price is going to fail. Let me put this here. I'm going to be curious of how this line looks. We may trade right up to it. Yeah, that's what I want. I want to see how that looks. So tomorrow, it will be very telling if we don't make a higher high. In all likelihood, we won't because of this structural break here. But it's too soon. But pay attention tomorrow and see how it goes. Because if we fall, it's going to be pretty significant. We could definitely end up way down in this area. This area being March. So that would be taking out 75% of year 2021's gain. And it could happen pretty fast because prices fall faster than they rise. Now, there's another concern. I'm going to look at the monthly chart. Now, this is the S&P 500 going back to the data we all have here only goes back to 1970. In Elliott Wave Theory, we have 5 waves up, 3 waves down, as I just said. In the 60s, like 62-ish, early 60s, we had a trend that ran to this high here in 1972. Then we had a significant correction. Now, this was ugly at the time. And back when this happened, this was a pretty significant correction. Let's see if I can tell you how much that was. Almost, let's just call it 50%. Okay, a 50% correction scared the hell out of everybody at the time. The high was in 1973. This was New Year's Day, 1973. And it lasted through to October. I'm sorry, it's not New Year's. This is a monthly chart, so every calendar is going to say the first. But it happened in the month of January, and it lasted until October of 74. So January 73 to October 74. That was nasty. So although it looks small at this scale, that was significant. That was a 50% correction. And so I'm going to call this move 1 and 2. And from 1974, following that hell, the market had a nice run peaking here in 2007. And Elliott Wave Theory, I'll call that all Wave 3. So from the end of that hell in 74 to 2009, that's Wave 3. That's a long run. Okay. And then we had the this was the that wasn't the .com. The .com, this was the .com. This was the housing crisis with the mortgage crisis. Okay, that's what that time period was. And then we fell here, and let's see what that decline was. Just approximately 55%, something like that. So these things are pretty major. And then from 2009, so I would call this wave 3, this big correction, 50% decline was wave 4. And from 2009 to now, it's wave 5. And within each wave, there are 5 waves. And in this wave, I'm calling this wave 4. So March of 2020 started wave 5, fractal 5. So the fifth wave of wave 5 is what we started in March of 2020. The question is, when is this thing going to be over? There is some debate about what this is. This move that hasn't finished yet. Is this the end of the whole structure, or is this wave 4 within this structure? I'm not sure within myself at this moment. I'm just trading it one leg at a time. But whether or not this is the final move down and then a resumption of the trend up, or uh, a resumption and a bigger correction. If this is wave 5, the end of wave 5 that started in 2009, if that's the case, the level of correction we're talking about will be something on the order of taking all of this out. We're talking about 12 or 13 years. It won't happen all in a day, okay? It would happen over likely several years, likely a year and a half to, or more, okay? All right. So it's not like you're going to wake up tomorrow and the price is going to be down here. No, it's going to snake its way there with declines and pullbacks, It would snake its way there, okay? So when we finish this swing, depending on how high we rise on the way back up, and me using, Elliott Wave Theory and my oscillators and all that stuff, I'll be in a better position to know if the trend is showing proper strength to lead to a high above this. I'm hoping that's what it is. I'm proceeding as though that's the case, but I did want to put it out here in public, the bigger view of a super cycle correction. You can Google that, so a lot of the major corrections, the scary Great Depression like corrections that people are talking about, it's this in an Elliott Wave context. It's that bigger wave count that I just kind of walked you through since 1962. And so it would be a correction of that. Actually going back to 1934, but even going back that far, we would definitely take this out. So it would be something pretty catastrophic, but it won't, like I said, it wouldn't happen all in a day. So I'm just going to proceed initially as though the more conservative thing is likely, which is that this whole move is wave 4 within this structure that started in May of 2020. So, but even in that case, we still have a significant decline coming, and likely ending in this area. Let's see, that would be, like I said, March of 2020. I'm sorry, of 2021. 10 months ago, 11 months ago. So you're taking us back to that point in time. So we could end up, who knows, maybe in March we could end up done with this thing, revisiting the low of a year ago. So we could end up wiping out a whole year of gain and basically resetting the clock back to March of 2021. And so if I'm right about that, now that's the good news, okay? That's the conservative good news. So if I'm right about that, then the price will just rise and make a new high. I'm leaning towards that's what it is, but that would cause for this wave structure here to be longer than normal. It would be an unusually or abnormally long wave 5. It is possible. It's not common, but it's not quite this common. for like the S&P and stuff, but it's possible. So I'm just gonna take this one step at a time, get this swing here, and hopefully when we start moving up, I'm seeing proper bullishness in the structure, and then I'll have another video saying, we have more that this bull run that we've been in since 29, which is historic in the strength of it. So this is like a move this great, quite this great, has never happened before. I would love to be able to say, once we get down here and start going up again, I would love to be able to say that this historic bull run is not over and we're going even higher. Could be the case, but I just wanted to give you the scary possibility as well as the short term. So we technical traders, we don't believe in hodling, okay? Because sometimes it's different. This time really could be different. Okay. As I pointed out to you other times where the market has lost 50% of its gain, this time could be different. Things that there are always exceptions to the rule. Yes, the markets tend to go up, but who wants to sit through a 50% correction? It could take you years just to get back to break even. Let's see. I want to take a look at what happened on a sector level, because now again, that was the light version what I just gave you on the charts. I really go deeper into it and go to teaching mode on my Patreon. So I would love to have y'all there. If my explanation makes sense to you, then I might be a good person to teach you. All right. So I have this site is stockcharts.com. They have a nice little market carpet, and they break down the main sectors, because money rotates not really from stock to stock. Money rotates from sector to sector, and then within each sector are industries, okay? And so you got some sectors right here, and the ones that I'm looking at that seem to have done well in this move since in this run up, that I think that's worthy of looking at, that might survive it, is this consumer staples and utilities. But this utilities is you kind of have to weed through that to find the companies that provide, the people you pay your utility bill to. Let me just break it out that way. They have some oil and gas companies in here that are not in the utility space. The way that they group these stocks, that some of them are not necessarily on that end of the equation. What I'm trying to say is, utility companies buy energy and sell it to you and me. So when the price of oil or energy sources, coal, oil, natural gas, when the dollar is strong or rising, which it is, those things go down. And when those things go down, that allows the utility companies to sell us utilities and make a profit. Okay. And so that's one thing that's going on. But this sector is kind of littered with some companies that kind of work outside of that. They really function more like oil companies. And I don't know why they have them in there. So you really gotta have to read the profile to see what that company does. But there are gems in the utility sector. So that's why a lot of times when the market is going down hard, the utilities, a lot of stocks in the utility space will actually rise, and you'll also find some in this consumer staple space right here. When I say consumer staples, think grocery store, center aisle, or all of it actually, from meat, vegetables, all the stuff. It's a staple. If you don't eat it, you're gonna die. Okay. Okay. The opposite of that is in the sector called discretionary. That's stuff you don't need. You want a new car, you want the name brand clothes, but you don't need it. Okay, but the staples is stuff you need. You're going to Walmart and you're gonna buy the food you need. The Procter and Gamble and Unilever and all those major companies. You're gonna buy those products not because you like it, it's because it's a staple. You must buy it to survive. And so a lot of those companies come into play. And one of them that I'm going to be watching is Archer Daniels Midland. It's an agriculture stock, so it's a major one, and a lot of food stuff. I'm trying to get this thing to be. There you go. There you go. So you'll see pretty much it's at a high. So all the while that the stock market was falling, I mean, it had a little dip where it joined in. And this looked like it made its own little wave forward, but it's got at least let me not say this is really far. I have to look further in the past to really see what this is. But the point is, it's running strong. Let me go to a daily. It's running hard. And this space may still run. And this is just one that I'm looking at. But this is a healthy trend. And so this staple space, a lot of grocery store stocks, you can find bargains there to kind of hide out there. And this thing is running hard. So I will be watching this as this market rolls over. I think tomorrow is going to be a positive day as we reapproach the high of today. But ultimately, I believe we're going to fail. It's not going to make a higher high. And then Friday, it's going to be bloody. It's going to be blood in them streets. Okay. All right. Well, that's kind of all I wanted to run through. And I said, let me post a video. Like I said, I looked up and saw I had been working very hard on Patreon. So thank you for the people who support me on Patreon. It's really because of you that I even put up videos, but I put up something. They hear from me 5 days a week. I would say 5 days a week they hear from me on Patreon. So it's been that way for several years, 5 days a week. That much I go hard over there because they're interested. And so I want to thank the people who I have people who support me on Patreon, but they don't necessarily they're not necessarily trying to be a trader. Okay, they just appreciate what I'm doing, and they support it, and I wanna thank them. Okay, for hanging in there. You know. But I think some of them wish I would do more YouTube videos. So and I think they're right. So I'm gonna do a little bit more YouTube videos. And let me see who I got rolling with me in the chat. What's happening, Mike V? It says 10:51 p.m. I wonder, what does that mean? What's that mean? Renewable energies. Yeah, well, here's the thing about the renewable energies. That whole space, anything related to energies, it doesn't matter if it's renewable like solar or whatever. It's all US dollar sensitive. And oil has run real hard. It's really in need of a major correction. But when that happens, it's going to happen. It's going to be nasty, but when it's done, we're set for energy. Old stocks, the oil stocks and the coal, even coal, solar, all of it, new energy and legacy energy. All of it's going to make money, and it's going to run hard. It's going to run hard for years. We might be looking at 5-10 year run. So that's the next bull market is going to be in energy, and we're going to attack that $147 all-time high and exceed it. Just per Elliott Wave Theory, we're going to exceed that high. Okay. But we're completing a wave one. We're completing it. After wave one is wave two. So the odd numbers go up and the even numbers come down. So wave two has to correct, and wave two can be brutal. It can be as much as a 78% retrace of the gains in wave one. But after that, oh boy, it price runs hard. And so the energy play is the play that nobody's really talking about, because it's sexy to talk about crypto, only. And I'm not against crypto, okay? I'm just, my point is, what I teach on my channel is that uh, money is made everywhere. It's not, it's crypto. It moves around. So money rotates. Money doesn't stay in one space, and so money's always looking for the path of least resistance, to go up. Okay, and so when things get overbought, when prices rise to um let's say irrational levels, or irrational exuberant levels, they leave, they rotate to places where the price is already kind of beaten down. Mo says, where have I been, man? Yeah, man, I'm gonna get busier over here, but like I said, I've been busy on my Patreon. They know they know. So yeah, that's kind of where I've been. Let me see. I guess that's all I got. I want to thank y'all brothers for riding with me, and let's see. I don't know what's up with. I ain't even call the person's name, but I trust that Mike V was on it. Thank you, brother, for keeping these streets clean over here. Thank you, Mo. Thank you, Mike V. I'm gonna go ahead and roll off, but y'all gonna see me a little more. I think I'm coming up with some ideas. I'm gonna, do a little day trade of a day. I'll do like a day trade of the day kind of thing, a pre-market thing. I'm serve up some content for the traders, people who are day trading. Let's see. Walt Diesel, what's happening, bro? Patreon has major activity. Oh, good. That's right. Thank you, brother, for supporting me over there, and thank you for backing up what I'm saying. So Walt Diesel, yeah, he hears with me a lot. I'm busy over there, and even when I don't post on the Patreon, I'm still busy because I do private training, and so only the person I'm just in the private session will know that I'm still working. So but and so the training over there is private and public. It's always the way I approach it is always up to you. Um in the beginning, you might want to make it private until you get to a point where you really understand it a little better. And then later on, you might find greater value in having it public, because you need the interaction with other traders in the group and get other ideas and approaches from them. So I've had some people block out a time to say, shoot, I think Lionel on crypto, yeah, he's over there. But yeah, I think he had a year, just blocked out of saying, okay, every Saturday at this time we're gonna talk, okay. And so I've had several people do it like that, and that's what we do. And so it's however you want it. It's whatever gets the job done. But yeah, I didn't mean to. I don't mean to totally neglect YouTube, because as y'all see, this channel ain't monetized. I am a capitalist, okay? And I think if the channel was monetized, I would be more inspired. But the channel can't get monetized if I don't keep posting. So it's kind of on me. uh, to spread a little bit over here, you know. So you'll be hearing from me, especially as this S&P does what it does, and I'm gonna kind of start, like I said, feeding, serving us some stuff for the day traders. Looking at the major indexes, some cryptos from time to time, and even some forex, even some futures, because we trade it all. We are uh, agnostic about the instrument. So we don't even waste time arguing about crypto versus stocks, or it's all of it. Money is green. Wherever the trading opportunity is, that's where we are. And we trying to learn it all, learn all of it, you know. So like I said, I discuss all of it. I think I cover everything in the financial, everything that can be traded, except for I don't really get too much into options, just because I don't trade options as much as I do other things. And so I don't think that, I mean, I can give you a good introduction to it, but that's not my thing. That I want to market, that I'm the person to come to for options. No, I'm the one to come to for technical analysis, as it relates to trading, forex, futures, stocks, crypto. But I will say this: in as much as options are a wasting asset, because it's got a time decay element. You buy a contract and it's got a date in which it expires. Technical analysis is absolutely required knowledge if you're going to trade options, because that decision you make about which contract to buy, which expiration. Let me put it that way: which expiration to buy. Um, you need technical analysis to make that decision, because you can be in the options world. You can be right about the direction, but wrong about how long you need to allow for the price to get to a certain level for you to make a profit. So you have to be right about the direction. In options, you have to be right about the direction, and getting the correct expiration month. And technical analysis, and in general, and Elliott Wave Theory in particular, definitely helps you do that. So I don't want to blabber too much, but I'll be speaking to y'all soon. I'm out of here. Peace, fam.